A weak dollar and some bad weather overseas are sending commodity prices soaring. Cotton, listen to this, settling at a record near $125 a pound following a cold spell in China. Gold prices are setting up for another stab of $1,400 an ounce. And then the Thomson Reuters Jefferies CRB index, which includes almost all major commodities, that index trading at its highest level in more than 2 years. Well, joining us for now to talk about all of these moves in commodities, Gero. He's VP of Global Futures at RBC Capital Markets. He's been trading commodities for more than 40 years. So a long time you've seen the trade in commodities. Is it very unusual, the trade that we've seen unfolding over the last few months?
I think this has been the perfect storm. And the reason it's been a perfect storm is because, A, you have the dollar weakness. The dollar weakness made our commodities desirable and cheap to buy for export, which we didn't have before. Then we had bad weather. And then we had all kinds of other problems. We had corn growing problems. We had problems with sugar. We had problems in Brazil. We had drought. We had floods. And so everything came together to move the softs, the grains, and the other commodities up. At the same time, the low dollar moved up the price of gold and precious metals.
So a lot of stuff going on. George, how much, though, in terms of the weakness of the dollar, how much of that is playing into the commodities trades and the prices at this point?
Quite a bit.
Quite a bit.
Yes, and the weakness in the dollar is probably achieving the export goals that we haven't had before. So, yes, while people are concerned about losing purchasing power and they're rushing to buy gold to hedge that, on the other hand, in the long run, we are starting to export some other things that we haven't recently, and that's good for us.
Can we make the conclusion that as we see these higher commodity prices that it is going to ultimately lead to, let's say, to food inflation at this point?
Well, I'm not so sure about food inflation because they're substitutes to all the foods, but there is going to be a price hike probably in grains and coffee, and there could be a little bit of a price hike in clothing, apparel, because of the high cotton prices that we have just seen.
So you think the gains that we've seen in commodities, they're going to stay?
Some are, yes, they are. I mean, look at palladium today, a record price for palladium because the trucks have to come up with 20% better gas mileage, and people don't realize that palladium and platinum are used to crack crude oil into heating oil and gasoline and to be in the catalytic converters of all the diesel engines.
So that's a fundamental trade, makes sense, and it's here to stay in your view.
And people haven't looked at it that way. They've been looking at it as a surrogate dollar play because the big move has been in a fundamental like copper.
Right.
Copper is trading in Shanghai at record prices and in London. And of course, we're getting that business in New York, too. And then now there'll be ETFs, exchange-traded funds in copper, as one coming in silver shortly. We have a new one that was just listed on the New York Stock Exchange that includes all precious metals. And all of these need physical material to back the ETF.
Hey, George, I got a question from out here in left field, kind of. Does the rare earth story, China's limiting of shipments of rare earth minerals, does that have any effect on those commodities that are often used in conjunction with them? For example, you mentioned platinum, right? And a lot of the platinum that is used in cars is used in conjunction with these rare earths. And if they can't get there, does that have any effect on their price?
It certainly will, and it certainly could, and therefore I think you are going to see some price inflation, but look what happened today. The 5-year TIPS was auctioned at a negative rate. Well, that all means that people are expecting some kind of inflation. Now, eventually, something could be done about that, and of course, if interest rates do pop up next year or the year after, that'll strengthen the dollar. In fact, the Chinese strengthened their currency just last week when they raised rates in China to get the yuan up a little bit.
All right, so if we're worried about inflation, then would you anticipate that gold that's already went up about 21% this year, that it continues to move higher as well?
Well, it could, but on the other hand, there's always a but. And the but is that the mining companies love this high price, so they're going to hedge.
Of course they do, right.
Some have to buy back their hedges, and some are taking advantage of the high prices because junior miners and medium company-sized miners now can get financing because of the high price of gold.
20 seconds.
That means longer term, more material because of high prices.
20 seconds left. I got to keep you to it. Got a favorite commodity at this point?
I always have a favorite commodity. I like the precious metals groups. I like PGM, the platinum group metals, and I like copper.
All right, good to know. George, good to get some time with you. Thank you so much.
Thank you.
George Gero, VP of Global Futures at RBC.